Good evening, my weekend video. Okay, guys. So we had some interesting price action happening there last week. So what we got going on the ES is here on the monthly webs. So we violated into uh, last month's trading range. So we have a month-on-month look inside the prior month. So that's a little bit bearish here. So keep that in mind uh, potentially here. So the monthly resistance is still above us here. We haven't gotten through it. We need to get it back above 59.20 for that to be, you know, us, in price discovery to the upside on the monthly time scale. And right now we're not that way. Okay, guys. Now if we go down on the 4 hour real quick, it gives you our weekly webs. And what we do have happening here on the 4 hour. So we've completely violated the past 2 weeks. The blue lines represent the high volume price points for the past 2 weeks. They both got neglected, so this is a very good sign of a massive amounts of premium selling up here. Very good sign. And all the buyers had gotten completely shut down. They just couldn't gain any traction at all. Buyers are completely shut off and shut down up here at these highs. So be very mindful of that. We're currently into the final election gap. We're inside that, right on the edge and inside of that range, and we close right at the 4 hour 50 SMA here on the ESs. So heads up on that, and gives us a little bit of an idea breakdown. We broke the trend that we've been in. You see this trend line right here. So we're outside. We've been outside it once before. We're currently outside it again. Okay. Uh, so on the daily, the 50 SMA is down here, suggesting this here is your main back test. Now that this is broken, this pattern looks like a, exhaustion rally. It does look like a possible exhaustion rally. This would be the area that we'd be first looking for some sort of support. It'd be around the 58.12, 58.13 possible support area here on the ESs. Okay, so that's pretty much my takeaway on that going here. Remember, we were in on the S&Ps, we were into 100-year trend resistance. And all of this profit taking up here makes total sense. That the big boys were selling option premium as fast as they could sell it up at this high point right here, and now we're coming back down. So looking for a down week. We'll see how it all plays out. Looks like a possible reset all the way down here to the 5750, this trend line down here, 5700, 5750 this week. So very, very good chance that happens. Like I said, we have broken into the monthly value from last week uh, or from last month. So makes it a little bit more bearish since we broke into a prior month's trading range. So be very mindful of that. NQs, go back on the daily real quick. NQs, we're acting a little bit weaker. So we are deeper into that monthly trading range than we were with the S&Ps. We're much closer to filling the gap. We're just came awfully close to filling the gap Friday, but we didn't quite fill it. So be very mindful of that. We did manage to, the bull bear right here, you see this really high volume point of control right here. So we bounced off of the point of control that built out for September. Okay, so there's high volume right here where that line is, and we managed to bounce right off that Friday. So, as far as bull bear cross of inventory, we did manage to maintain monthly bull bear cross. So basically, all the bullish inventory from September, we managed to save the bullish side of inventory for the NQs so far. So let's be very mindful of that. We do have some warning signs. We had an island reversal here late September uh, or late October. Late October, we had this island reversal breakdown. Okay, we've come up. Now we have an island reversal breakdown. Again, two back-to-back island reversals. We're currently trading right at where we broke down on that last island reversal. So very, very mindful. You know, this could be we could be on a nice edge for further downside here. So be very mindful of this, how we're trading right next to this prior breakdown on the prior island reversal rejection. Okay, I'll go down to 30-minute. Okay, 30-minute, guys. No, 4 hour. I'm sorry, 4 hour. I have to zoom in on that one. Ah, darn it. Zoom in here real quick, guys. So on our 4 hour, things I got going on here, we're below the 50-day moving average on the 4 hour. Like I said, we haven't completely filled the gap yet. We got a few more ticks to come down to fill that prior gap. We didn't quite get that Friday. We were in a balance. See how we were in this weekly balance trading range for several weeks? Fairly balanced trading range. We've just basically come down into that 4-week balance of trading range. But we still don't have an extreme. I mean, an extreme would have put us down in this area, uh, so let's definitely keep that on watch. Some little takeaways. NQs were acting the worst last week too, and we have NVIDIA reporting next week. So be very mindful of that. Okay. Russell, go back on daily real quick. Okay, guys, on the Russell, it's a little bit more. So we came back down. We saw relative strength in the Russell since the election. We came back down to the prior month's support, and so far we've saved it. This here is a very, very critical tell on the markets. We do not want this breaking below Friday's lows. So this is actually one I'm looking possibly to the long side if for any type of bullish take in the markets. But you see how these highs were really tight on the way up, So we do have a couple support areas on the downside. If they do want to come down and fill this gap, could very well be support even down to the second, back down all the way back down to September's high buy zone. So heads up on that. But both of these are looking all right. And this is actually structurally, it's actually you have uh, less overhead on that one versus some of the others. So be mindful of that. Go on the 4 hour real quick. We still held above the 50-day 4 hour as well. Heads up on that. So this is actually a little bit more structural support than what you see in some of the others. YM, yeah, of the 50 so far. We're right into that prior, if you're going for the daily. So we're right into that support area. Very easily could bounce. Definitely keep that on watch. We haven't lost our support yet. So basically, as long as we're not taking out Friday lows Monday morning, you have to think that this could very well be by the dip on these markets. So heads up on that. Now I do have a new indicator on Anchored VWAP. Give me a second here. My final approach at looking at the markets here real quick. I'm going to go back through real quick. This is my Anchored VWAP study, the big heavy red line there. That's your Anchored VWAP. And it's the intraday study based off 1 o'clock Wednesday afternoon. That's where we put the highs in and the sell-off since then. So this is our current Anchored VWAP backtest for this sell-off. Okay, so basically what we got going on here for the overnight using this study. So we came up to the 1 standard deviation breakpoint and we broke and a resistance wall, and we found resistance right there and right there into the close Friday. So basically we went into Friday with still a net sell signal in the markets. We had a nice little relief rally into that standard deviation, but technically we're still in a sell signal going into Monday. So I definitely want you guys to see that and understand that. Slash NQs. Zoom in here on the NQs real quick. Similar situation. We didn't even get to backtest that one standard deviation break. So basically, we come into Monday morning and we're breaking above the 2560. That'll probably be where it's at. If we're coming in Monday morning above that, then obviously bias should start leaning more to the bullish side. But below that, we're probably going to continue to the downside. So heads up on that. As far as EESs go, I forgot to tell the price point. It was right there at the close. Yeah, 59.05. So basically, if we stay under 59.05, our bias should remain short. Above 59.05, we should actually start poking our nose to the long side. So be very mindful, knowing that our resistance goes all the way up to 59.20. So be mindful, 59.20 is a heavy resistance as well. But our anchored VWAP suggests that we can start nosing into the bullish side at 59.05 there Friday or Monday. Russell, zooming in here, we did not back test the one standard deviation. Relative weakness here, guys, relative weakness. So basically our first back test here is basically 23.23, 23.24, something like that. That's our first main test. And then after that, we'll see what happens. So, if we're coming in Monday morning and we're trying to push above that, then, we should have a fairly quick move all the way up to 23.50 in that scenario. So be very mindful. We are setting up, for a potential nice little squeeze scenario using our anchored VWAP if we get any type of bullish bias right out of the gate Monday morning. And that goes true with the other indices too. Similar situation. So the diamonds were acting better Friday. Okay, so we did spend 2 hours into that one standard deviation, but the weak markets were so weak they could not cross back bullish. So be very mindful of that. I'm just making this bullish case, because we're starting to see some uh, shorts getting nervous going into Friday's close. So be very mindful of that. The shorts were getting nervous into Friday's close. So, so basically we came right into it. So in my opinion, ESs and the diamonds, as long as we're opening, above that end of day highs, we're starting to seeing a potential short squeeze setting up for Monday morning. So be very mindful of that scenario. Okay. So I'm going to keep it short. I'm not going to go into a bunch of other things here. Uh, but I did want to go over some of these charts with you, some things I'm looking at here. It's just not a slam dunk short going into next week. I'm telling you that right now. So be very careful. There's still plenty. We're not maxed out on the margin. We're far from it. So there's plenty of cash on the sidelines that can squeeze us back up, and we could get a double top before the markets finally want to roll over. So there's definitely that scenario too. But there's a lot of damage done to the market, and there's a lot of overhead supply now. But opportunities, to come back up to this anchored VWAP. I think it's a fairly good odds that we're going to be coming back up to our anchored VWAPs here. Uh, we'll see how it plays out. But man, look how far that anchored VWAP is here on the SSO, 59.60. We had to go all the way back up to that just for a hard back test of that. So that's a possibility. I mean, the problem is we broke into those prior monthly ranges in some of these charts. So you have to definitely keep that in mind. You're fighting monthly levels to catch those bulls. And uh, I want to see where we open, and we'll go from there. So, but right now 59.20 is actually technically probably you want to be shorting that, but in theory, but we're going to be above that one standard deviation. Personally, I wouldn't want to do that. So we'll see what happens. Okay. Thanks a lot. Please like the video if you can. Retweet me on Twitter. Uh, Gumby9662C, and I really enjoy comments below. If you get a chance. I'm a perma bear. I really think would love to see these gaps to fill. Think it's seeing that double island top on NQ's quite telling in my opinion. Yeah, knowing that there was such massive volume selling call premium at the highs into 100-year resistance that's completely blown up now, uh, it gives me a lot of reason to think that the markets are going to be weak. So I don't know. We'll see. Okay, thanks.